Hey guys, it is Julie here with JT Wealth. In today's video, we are discussing Palantir. We're going to take a look at a couple of the driving forces behind their stock's recent decline lately, and then take a look at both the bearish and bullish future outlooks. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are discussing Palantir, whose stock has been on a steady decline for this past week. Trading under the ticker PLTR, the stock is currently sitting at $24.97 per share, which is down over 30% in this past 6 days. There are two major factors behind this recent price decline. First of all, they've recently had a majority of their shares become unlocked, and secondly, they recently had an earnings report. So we're going to cover both of these, what exactly occurred so that you understand what is going on. Then we're also going to take a look at a recent announcement today, plus some very recently updated analyst outlooks on both the bearish and bullish side. Hopefully, with all of this information will help you understand what is going on with Palantir and whether you're looking to get out or if you're looking to buy the dip. And just before we get into all of that great info, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links in our description. If you're looking to sign up for a new investing account, Webull right now is giving away 2 free stocks worth up to $1,850 for opening up and funding a new account. So make sure to check them out. All right, now let's get into Palantir, starting off really quickly with who they are. Now, Palantir is an American software company known for their big data analytics. They are also well known for working alongside the United States intelligence community as well as the Department of Defense. And Palantir recently just went public through a direct listing back on September 30th, 2020. Now, what's happened this week is that nearly all of their shares became unlocked for trading. So what exactly does that mean? Well, when a firm goes public, the owners tend to sell roughly 15 to 20% of the company. As part of the IPO process, the remaining 80 to 85% is almost always subject to a lockup period, usually of 90 to 180 days, in which they have agreed not to sell any of their shares. Upon completion of this period, these shareholders are then free to sell their existing shares. Thus, it results in a permanent shift in the number of available shares in the marketplace. Typically, if there is a sharp increase in the number of available shares, the stock price is pushed down. For Palantir's stock, this share unlocking occurred today. 2 longtime investors said in interviews that they will hold, but at least one other, billionaire George Soros, has publicly signaled his plans to exit. Soros Fund Management, which revealed in November it began investing in Palantir back in 2012 and owned over 18 million shares, has said it will sell for ethical reasons. The firm said at the time that it had sold all it was able to and will continue to sell shares as permitted. Palantir does still have plenty of believers, though. Its tools are used by corporate titans as well as governments around the world, and nearly a dozen of which are using Palantir to battle the coronavirus and power vaccine distribution. Adit Ventures, which said it holds about $270 million worth of Palantir, told Bloomberg it will sell few, if any, shares on Thursday. ARK Invest has also indicated its support. Speaking in a pre-recorded video shown to investors Tuesday, CEO Alex Karp walks through snowy woods and discusses the perils of technology companies managing for quarterly expectations and near-term myopism. Cathie Wood, CEO of ARK Invest, backs that philosophy. Palantir's attitude is refreshing, she said in an interview on CNBC. It's exactly how we invest. We want our companies to invest aggressively. We don't want profits now. So speaking of profits, let's now turn to Palantir's most recent earnings report, which just came out a couple days ago. So Palantir posted solid revenue but missed on earnings, and the future forecast was a bit disappointing. Revenue is really driving the company, and this is a growth play, plain and simple. Looking below, we can see what is forecasted down the pipe. The missing block was 2020, which we found out earlier was $1.1 billion. That is a 47% increase year over year. Going forward, analysts are projecting the pace stays heavy at 35% plus per year revenue growth. Often we consider 20% being strong, so that makes this look really good. For the fourth quarter, the company posted $322.1 million in revenue for the quarter, which was a beat by 20%. But the real shock came from the earnings per share, which came in at a loss of 8 cents per share versus the estimate that was supposed to be a positive 2 cents per share. So it seems that many investors were disappointed by this, plus felt that the future forecast was a bit lackluster. But in that same pre-recorded video I mentioned earlier, their CEO emphasized on the company's long-term prospects, saying, "We hope those of you on this call who are current investors stay with us, and those of you who prefer a more short-term focus, that you choose companies that are more appropriate for you." So Alex Karp certainly does not sound concerned about the company's long-term growth. Amidst all of this, Palantir did announce some exciting new news today in regards to a partnership. And that is that Palantir has teamed up with Akin Gump to introduce a new legal digital service platform. The platform, Akin Gump's RegSpot, will be powered by Palantir's Foundry software and allow Akin Gump's clients to access solutions to meet their legal needs and compliance. Palantir's COO said that Palantir has a long track record of deploying technology to solve the world's hardest problems. We are excited for another example of how our customers are able to configure software as a service offerings for their own customers on Foundry at remarkable speed. With all of this recent news for Palantir, we've actually seen a lot of analysts update their price targets and ratings within these last 2 days. So let's take a closer look at those. Because right now, Palantir comes in as a moderate sell that is based on 2 buy ratings, 1 hold, and 4 sells. The average price target is just above $25 for about a 3% upside. Taking a closer look at those ratings, we have all of them pretty much coming in yesterday from 4- and 5-star analysts. Our highest price target is from analyst firm Jefferies with a $40 price target for a 60% potential upside. Our most negative rating comes from Citigroup with a $15 price target for about a negative 40% downside. So let's take a look at some of the comments behind those highest and lowest ratings. The most positive rating there was from Brett Thill, who is a 5-star rated analyst. He noted that Palantir reported a top and bottom line beat in Q4, along with robust large deal metrics, and said it's targeting $4 billion or more in 2025 revenues, but that the stock remains under pressure due to Thursday's lockup expiry and the recent run-up that the stock saw, up 35% year-to-date ahead of the report. However, he views Palantir as a highly unique story for long-term investors, given that he thinks its growth sustainability at significant scale and aggressive profitability ramp puts the stock in a rarefied air among software companies. On the bearish side, we have analyst Tyler Radke, who kept his sell rating on Palantir with a $15 price target, saying that the results from their Q4 earnings featured solid reported revenue upside, but came with signs of growth drivers narrowing, with new customer growth still lacking and commercial revenue missing expectations. The new 5-year target of $4 billion for revenue looks high, but ultimately may be a non-event for the stock, he says. He thinks the stock is overvalued and could be particularly volatile into the upcoming lockup on February 18th. And of course, we saw the results of that lockup ending on today, February 18th, where we know that there were some big firms leaving for their ethical reasons, but also could have just been some others taking some profits there. Personally, I try not to share too much of my own opinion in these videos, as I want everyone to be able to make their own investment decisions based on facts and information. But on this one, I will admit I probably lean more to the bullish side. I think if we can find support around these current prices, this stock could show some real growth over the future years. So again, personally, I think this could be a great buying opportunity on the dip. But all of this is up to you. I always love hearing from you guys, so make sure you let me know your thoughts. Do you think Palantir looks like a good buy on the dip right now, or are you staying clear of this one? Make sure to let me know in the comments down below. Now, as I said, guys, these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Any investment decision needs to be made based on your own research and due diligence. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.